Hi, I'm MJ Nodilo here with the May edition of the Pathlight Insight. And it somewhat feels like a broken record to be sitting in front of you again today, encouraging you to tune out the noise and the hyperbole and innuendo coming out of DC. But with first quarter earnings coming through now, and we actually have real hard data, we think it's a message that needs to continue to be reiterated. In fact, with over 450 of the S&P 500 companies reporting first quarter earnings, we saw that 75% exceeded earnings expectations, with an average year-over-year earnings growth rate of roughly 13.5%. Now this is the highest year-over-year growth rate we've seen in 5.5 years. Now there are those that say, well, earnings are easily manipulated through various accounting measures, etc. And that can be correct. So let's look at a measure that is not easily manipulated, and that is sales or revenue. Well, those same 450 companies, 64% beat sales expectations with an average year-over-year sales growth rate of just shy of 8%. When you dig a little bit deeper and you look at companies that do over half of their revenue outside the United States, that number jumps up north of 9%, and really speaks to the improving global economy that we're seeing. Now certainly I would be remiss if I did not acknowledge where we are in the business cycle, and there are a lot of people that are concerned about especially US stock valuations after a 7-year run. Well, the forward price earnings ratio, which is one of the most common valuation measures, is currently at 17.5 times forward projected earnings. Now that's a bit high by historical measures, but certainly nothing overly excessive in our opinion, and especially when you consider the fact that interest rates are so low. And there's a correlation between low interest rates and higher PEs. So I will remind you again, please don't let the noise that's coming out of DC and the media derail a very good investment plan. Keep in mind that you are not invested in Washington, D.C., you're not invested in policy measures, and thankfully you're not invested in politicians. Rather, either through a mutual fund or direct equity investment or debt investment, most are invested with some of the most innovative and thoughtful and efficiently well-managed companies in the world. And those things do not get derailed based on really negative things and sentiment coming out of our politicians. Please contact us with any questions. Thank you very much for your time.